following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great week, folks. This is a quote by Beatrice Potter. Believe there's a great power silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We have the Dow down 15, NASDAQ is flat, S&P's are down 5.5, gold contract down $5.60, traded at $1,199 an ounce. Silver down 10 cents at $16.27 an ounce. Platinum off 20 bucks at $1,152 an ounce. Copper down 2 pennies at $2.71 a pound. Light sweet crude up 28 cents, trading at $51.92 a barrel. Bonds, you have the 10-year up 6 ticks, 129 even. 30-year flat at 163.15. In both cases, folks, they rejected lower price, had lighter volume. Those bonds are building cause for higher price. They want to go up to their January highs. It's going to be wild watching this baby shake out. King dollar up 154 ticks at 99.75. King dollar got into and failed at its March 18th high today. We'll run down on that, but I suspect now she's going to run down the other side of that consolidation, see if she can take out those lows. Euro down 31, trading at 105, and the yen down 13 at 120.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Cash S&P today, we get to 2107. 2107 gets you up and over the March 25th downdraft. Bottom line, you get to close underneath it. This is going to be wild watching this thing shake out, because what the market has done all of last week, of course, is that you were moving higher. Volume was lighter each and every day. What we have out here today is that the volume's even going to be lighter today. So that's going to be basically, you close at this level. It's a failure going into the downdraft. The downdraft that we're talking about on the 25th had some monster volume, too. Well, no, it wasn't that bad, actually. It was 791 million. It looks like we're going to come in about 575 million today. We go to the SPY. We take a look at the SPY. What you have with the SPY is this. SPY got to a price point today of 210.63. The high of the 25th is 209.35. Right now, we're 209.60. So the SPY hasn't failed yet at that benchmark of the 25th. NDX 100, we use the 3 Qs and we take a look at the NDX 100. What we have with the NDX 100, the Qs are trading out right now at 107.73, and the high of the benchmark is 108.20. We made it to 108.38. Volume-wise, we've done 13 million. That's going into 41. So the bottom line is that that's going to be a failure if you close right at these levels. We go back over to the S&P just to see that correlation. Volume-wise, that's 54 million versus 159 million. Small caps. We go take a look at the Russell 2000. You use the IWM. Small caps today, 126.39. Now, the high is 126.31. So it's taken out its high. We're at 125.90. We'll see whether we get below this 125.60. 125.60 is the downdraft of that 25th. If the small caps also did that, that would be harmony, that you'd have all three of those indices failing at that top level. Gold contract. What do we have with gold? Bottom line, folks, gold's building costs for higher price. They can't whack this gold market. It's pretty amazing, actually. You have gold down $6 today. You did 103,000 contracts. The 103,000 contracts is coming into 151,000 contracts. Bottom line is that gold is building cause, higher price. We'll see how it attacks the B point once again. So what you have with gold is this. Gold came off the bottom March 17th. You have it at 1142. You have the first expansion topside to 1220. Now, you pull back with light volume. You made a run for 1220 again. You didn't have enough volume. The first time up there, we did 113,000 contracts. Second time, 106. Close, but not enough. You pull back. We still pull back with lighter volume. You had an expansion of volume on Friday, which was sweet. 125,000 contracts. You pull back today with 103. That baby's going to make another run for the B point. The real key is, of course, you got to get the volume. You get the volume, you really got some action. Silver. We're going to take a look at the silver market. What you have with silver is this. Now, gold is stronger than silver. Silver market out here, down 12 pennies. You're at $16.22. You know, bottom line, silver needs a couple signs of strength. They have an hard time breaking it down into 16.08, but I suspect this very well could test the 16.10 once again, the 16.08 again. Now, let's talk about, well, here, we'll do bonds next. We take a look at bonds. What we have with the bond market is this. 10-year bond out here today, rejected lower price. We had 697,000 contracts out here. That 697 is going into 133,000. You got to a price point of 128.18, rejected it. We're at 129. Your last swing point, which was generated on April 3rd, was 130.04. Bottom line, the high of the 10-year right now is 130.19. We're really right next to it. This thing's going to go after it, and it's going to be amazing if it blows it away. 30-year. 30-year bond, same type of setup. What we did with the 30-year. 30-year bond today goes down to 162.19. That also rejected lower price, had lighter volume, and this has been going sideways now since March 18th. You know, March 18th is the big benchmark, folks. The highs in the 30-year are 171.09, and we're really not that far away from them. That was generated on the 30th of January. Now, King Dollar. Let's go take a look at King Dollar. This is the number, folks. And when I say this is the number, if you can get King Dollar right, you can get the market right. We have probability goes higher. Let's put it that way. So, what do we do at King Dollar? King Dollar is 57,000 contracts. You're going into 102,000 contracts. We get to 100.27, gets over the high. It's underneath the high right now. That's saying King Dollar can't handle that higher price. What does that say? That says, okay, now King Dollar is going to try to come down to the bottom of the consolidation, which is 96.31. You know, we'll see if, in fact, we come off the highs with volume. This is going to be really cool, meaning whatever information it releases, and this is why. King Dollar, folks, had done a 1 to 2 ABC structure on the way up. When you do more than a 1 to 1.618, it's immediate change of trend. Did a 1-2. Then you came off the highs with volume. We'll come back to those highs. We've tested them with volume again. If King Dollar comes down off these highs again with volume, guess what? That's saying you got some nice sellers inside the market in general, inside the currency market. Some of the high volume stocks in this low volume market out here, you have, let's see, we have Facebook down $1.27, GE is down 81. We got Intel down 5 cents. EMC is up 16 cents. Let's take a look at some of these Dow stocks. Big Blue is trading out down 9 cents at 162. You get Boeing down 94. Inside the Dow, putting strength into the Dow versus the weakness into the Dow out here. JP Morgan Chase is the strength inside it. That's up 51 cents. United Healthcare is up 79. Travelers is up 41. And Procter & Gamble is up 20. Taken away from it on the way down, you get GE down 81. Johnson & Johnson's off $1. Visa's down 54 cents. And Pfizer is off 28 cents. Inside the NDX 100, what do we have? Inside the NDX 100, you have Netflix. That's the mover, up $21. Intuitive Surgical's up 14. Vipul Communications up 10 cents. And Facebook is up 126. Taken away from it, Symantec is down 130. You got Staples off 43. Mylan Pharmaceuticals up $1.48. And Checkpoint Software is down 174. Now, as you come over to our website at TFNN, you got to check this out, folks, okay? Our man, Mr. Dave White, put a video together. It is, I'm telling you. Am I prejudiced? Yes. Because it's one of our talk hosts? Yes. But I'm telling you, you got to go into breaking news, okay? And you got to, Dave put this together, Janet Yellen, should I stay or should I go? It is unbelievable. Send it to all your friends because this is, we gotta get Dave, I think I gotta be Dave's agent, man. This thing is just phenomenal, the job he put together. It's a spoof on the interest rate structure, folks. This is Tom O'Brien, this is TFNN, you stay right there. And that's right under breaking news, folks. Right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 54, NASDAQ is flat, S&Ps are off 6.5, and let's see, you get 45 minutes approximately, well, about 40 minutes into the close. This is going to come in really light. We're at 388 right now. They jam some at the close, that's for sure, but that is saying that you're going to do probably under 550. So depending on how this price handles the close out here, folks, you get into that. And the NASDAQ, now this is really a trip. So the NASDAQ is also going to come in probably at about 1.4. If NASDAQ comes in, that's going to be a tough one. If NASDAQ comes in at 1.4, that's going to be a monster heads up. The reason being is that I haven't seen it come in 1.4 in a long time. You know, the bottom line is that 1.6, 1.7, 1.8, you get a couple 1.5s inside there, but let's go over and we take a look at the XLE. So the oil market bottom line continues to basically just trade in the range. 50 bucks, it seems like, is hanging around that level. The actual contract out here today, the spread inside the contract could only get to 53.10. And it looks like not enough juice, not even close to enough juice either. We had 327,000 contracts. That's saying that that's going to try to back into the $50.45 to $47 area. The XLE, now the XLE, of course, is the large integrated equities inside of that. And that little baby has absolutely zero traction. You know, the XLE today got to a price point of 80.60. It's trading at 79.30. No, got to 80.60. Trading at 79.30. It's going into huge downdrafts. What is hitting this baby, and what you can see with the XLE, folks, is that you had the first initial downdraft from $88. That was in November. So we went from $88 down to 74. You've been bouncing since that point. You know, and each and every time that you're getting up to approximately the 80, 81 area, the sellers are there, and that, by the way, is right where it gapped down to. When it gapped down on the 28th of November, it opened at 78 bucks, $79 rather, and it gave it up. You got monster volume there. You get volume of 51 million shares. Each and every time that you're going into it a lot lighter. Now, what you have out here today, which is pretty cool when you just look at where is the energy. When we had gap down, you know, you gap down with 51 million. That was in December. It took all the way until February 17th to get back up to that level, and you get back up to that level with 22. So you get 22 million versus the 51 the way down. Today, what do we got? It didn't make it to that level, and in fact, the volume contracted even more. We're only at 8.6. So what does that set up? Well, it first sets up that it will come back into this like 77.95 area, you know, and we'll see, because that had some good juice coming off that last low. And if you break down, though, that 77.95 area, that's game right to the bottom. Let's go over and we take a look at ExxonMobil, because ExxonMobil is the culprit inside of there that is not only the largest weighting structure, it's also the cleanest setup for an ABC structure on the way down. ExxonMobil out here today has had 6.9 million shares, and that seller is just sitting there. Man, they're sitting there at, you know, the $86 mark, and they just, anyone and everyone that's going up to that level, they just let them have it. And the longer that we go sideways here at these lows, the more that it's looking like it's a decent ABC down. The A point on this, folks, would be 93.45, and your B is 82. So, you know, you got $11. The C is out at 86, which gives you, what, 84 bucks. You know, so that is a big number, because if you get good old ExxonMobil running down to 84, 84, where is 84? That would make sense. Let's put this on. If I put this on a weekly basis and pull it back, you're going to see that's the next consolidation is at that 84, and it was trading there for quite a while. When you take a look at it, the ExxonMobil going into 2012 and 2013, That's the 84 level. So it looks like, hey, it wants to make it down to that price point. Chevron, CVX. We take a look at Chevron. That's the second largest weighting inside the XLE. Chevron has been stronger than ExxonMobil, but Chevron also looks like it is setting up to get into the January 30th low. That's a high volume spike low out here. Chevron couldn't handle price out here today. Tried to get the higher price, couldn't do it. We're at 106.52, and that low out there is 98.88. Financials. We go into the financials, and we take a look at the XLF. What we have at the XLF out here today, that is trading at a price point of $24.34. That's trying to get into a couple different areas, and it's not even close. It's up 9 pennies. You're doing 17 million shares versus 51 million shares versus 46 million shares versus 35 million shares. It's pretty intense. You know, the first set of numbers on the way down where we were banging out 51 million shares, that's in December. And January, you're banging out 41 million shares and 46 million shares. And then March 23rd and 24th, you're banging out 28 million shares and 32 million shares. And you're hitting that with 17 million. Just doesn't handle it. You need so much more than that, folks. It's not even close. So here's, we're coming into this close, and someone is whacking the S&P, no doubt. We take a look at put this on a 10-minute for a second. So the S&Ps are down 9 right now. Someone just hit this, and they hit this pretty good. So this is, well, watch this. This is going to be interesting to see whether there's enough time in the marketplace. Let me see. Yeah, there's plenty of time. ESM5. So you get a small ABC structure on the way down. It's going to break it with, it broke it with volume too. So let's take a look at how this baby's set up. Right now, you're 2. Okay, so your A point on this is 101. Your B is 87. That's a good one. Okay, so let's take a look at it. 101. That's $13. That sets up 82, 92, 82. That sets up 79. We could hit 79, 2079, and we're at 86 before the close. What we've just done here is that the last time down, we did 28,000 contracts, and we're already at 26,500 contracts. You get 2 minutes left. So it's going to have the juice for an intraday ABC structure on the way down. That's pretty wild. But we'll see how that volume characteristic shakes out. It looks the way that this is setting up right now, though. Guess what? The high was tested out there. You're gonna have a failure on price, failure on volume, and now the S&P is going to flip around once again and go after the lows. And the real key is going to be, as we go after those lows, will you get an expansion of volume? So last time that we came down here, bottom line, didn't have enough volume to break it down. On the 26th, we had 153 million shares. Bottom line is that you were going into 157 million. You know, still volume, but not enough volume to break it down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is down 72. Nasdaq is off 3.5. S&Ps are off 8.50. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right down 68. You get the NASDAQ off 3.5. S&Ps are off 8.5. And folks, Wednesday night from 5 to 6:30, I'm going to be doing an options course. If you want to understand options upside down, check it out on the front page of TFNN. It's only $97. It's an hour and a half. If you can't make it in person, it'll be on your page for 1 full month. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
Sure.
I was wondering, I noticed that at the introduction of your shows, you never discuss the VIX. You talk commodities, the dollar, the indices, but you never provide technical analysis of the VIX.
Okay.
May I ask why?
Yeah, because the VIX is a lagging indicator.
Mm-hmm.
So nothing, you can't, when things move, I mean, do you understand what the VIX is?
Yeah, it's volatility, implied volatility.
Right. So it has to happen first before it moves. And once once it happens, I mean, you listen to the show. I tell everyone 1 million times that trading the VIX is I don't like it. It's not. The VIX doesn't do a thing.
So you can't give us an analysis of the VXX?
No.
No, not at all.
No. I can give you an analysis, but I'm trying to have you understand that foundationally and fundamentally, that either one of those, right?
Yes.
That when the futures move out and the market gets volatile, it's already too late to buy them.
Okay.
That's just how it works.
Okay. All right. And then lastly, are you still bullish on the gold miners?
Yes.
You are?
Yeah.
Okay. So thank you very much.
Have a great one, man. Have a safe one. Let's walk through this for a second, folks. Okay, so the VIX itself, okay, the VIX has to do with the premiums that are charged by option market makers. That's all the VIX is, okay? And what they do is that they take the weighted averages of those implied volatilities, so implied volatilities equals premium. Think of it that way. So the implied volatilities is premium. They take the first month and second month expiration, and whatever the market makers are charging for premiums, that's where the VIX goes higher and lower. Okay, so what you have is when the market dives immediately, guess what? Immediately, everything goes up, and it goes up in a split second. So what happens is that if you're in the VIX at that particular point, great, it's awesome. But that's basically, to me, that's like basically throwing dice. Because what the difference is, there's not a difference in the buy or sell. Like I say, when I bisect or dissect, whether it's currency markets or futures markets or the equity markets, right? What you're doing is that it's a much broader screen, and it's saying what people are betting on. And the VIX, immediately what you'll have happening is that when things go south, the bets will come in, but then the bets come in, then what happens is that the premiums go too high in order to basically get a decent execution. Now, that being said, and it is what you have is this. The one trade that I would do on the VIX, but I'm not going to suggest any of you actually do this. And the reason being is that you really have to understand these premiums in a huge way to do this. Is this. When the VIX goes up very quickly in the morning, and then you're looking at the market, you could basically be selling into that, and then that VIX settles down very quickly also. The amount of premium inside calls versus puts gets skewed also. And because we've been in a market that just continues to go higher, that market is skewed right now. But bottom line, to cut to the chase, there's so many more things that you can trade other than the VIX to get a much better, clearer understanding and have a higher probability trade. That's why I don't like it. Let's get over and take a look at this SPY. So the SPY right now, you had that little push down. We're at 209.29, and we'll see whether the SPY can get back inside this 209 point. Let's see, what would be the number here? So the SPY would be talking, because see what would happen is that this ABC structure on the way down would just continue right into tomorrow morning. So the SPY would have to get back inside 45. We're at 28 right now, 209.28. We'd have to get back inside 45 to basically get anything done. You don't get back inside 45 before you get 20 minutes. That is basically setting up a structure on the way down. And in fact, if we look at this, watch this. If you shake this out, what we do have here is that it looks like the SPY right now. Oh, this is pretty intense, actually. This is pretty cool. So check this out. When on the 9th, when we closed on the 9th, that's a high volume bar right there, and it's 209.05. We've hit 209.09 today. That is the bar that if you're in this market, well, actually, if you're day and trade in this market, you want to keep your eye on that bar. Because that bar breaks, your next leg would be into this 208.65. So it's going to be interesting watching this whole thing shake out. Because what we don't have right now is this. You don't have a high volume high, which, even intraday. What you do have is that when the first sell down this afternoon was 11:10 a.m. actually this morning. That was a big sell down. Someone threw some real juice. In fact, I'll tell you what was thrown into that, because that's a big trade, especially in the SPYs. Holy cow. So check this out. Yeah, this trade right here at 11:10, 12:10, 11:10, 50. There it is right there. Okay, so 11:35, 11:10. So the first trade, it doesn't even look that bad actually, but man, it just went right after the other. Okay, they were selling 24,400 just SPYs at a time. So do the math on that. This is pretty intense. That's 24,500 times $209, and they just kept hitting it. They just kept hitting it. And what you had at 12:15, they were pushing 50,000. 12:34, 40,000. This is when you're looking at markets, folks. Okay, what tends to happen here. I'll put this other screen up here so you can see all these trades. These trades that, if you're watching Tiger TV right now, what these trades are, these are the largest trades. Oh, there it is right there. Oh my God. So at 11:14, someone, man, this is a hit. Someone actually sold 3,253,550 SPYs. That's about as intense as you're going to see. So that's 5% of the market. You know, and most times what you get is this. That won't be one sale. That, if they're not, I suspect they're not out of the market yet, because that's going to be a monster. But what you'll see another sale come in. And we have plenty of time before the market's closing for another one of these to come in. This might have been a mini one at the last downdraft at 320. This bar right here, it looks like it's not going to make that 320. And what will be interesting coming into this close is that will they be able to bring the market back to, you know, basically down 20 versus down 58. Not that 58 is a lot either. What we are going to be doing, it's going to be a lot of numbers coming out this week. Next week, though, is the slew of numbers. Next week, you get a big slew of numbers. If we go take a look at the XAU, the HUI, we have at the XAU and the HUI is this. XAU is back down 778. You're at a... That's weird. 1 second. The XAU is back down 92 cents at 68.35. And this also looks like it's building cause for higher price. The number that we're looking to get over is the 71.55 inside the XAU. Inside the HUI, the Gold Bugs Index, what you're looking for is that you're at 170 and you're looking to get up and over the 175.62. What I expect you are going to see is that you're going to see inside the wages that you're going to see WB. You're going to see some wage inflation that's sneaking in this market. Actually, it's not sneaking in the market. It's being pretty well projected. Everyone's saying that there is not any inflation. And bottom line, folks, is that inside the gauges of inflation, the largest percentages have to do, you know, basically with office work, with customer service. That's with services in general. It's wages that drive inflation. And, you know, I think if you just look at what is happening in the country, wages are going up, you know, and we'll see just how much traction that gets, because all that has to happen, the cash is out there. What has to happen is that people have to release their cash into the economy. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow is down 67. Nasdaq's off 4. S&Ps are off 8.5. Gold's down 5.10. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow is down 74, Nasdaq's off 8, S&Ps are off 9. The Nasdaq in particular, folks, the Nasdaq had a good little run going. If you take a look at the comp, what we did with the spread in the comp out here today, the comp went to 5,024. You're at 49.87 now, and the 5,024 actually got to the low of the high that was generated out there on the 20th of March. So bottom line is that's going to be a decent failure. And it looks like it's going to play out because we're at 4,986, and you get a close under this 5,006. That would do it. Inside the SPY, same type of setup in the SPY. It looks like they're all going to come in harmony. The SPY, what we're looking at is that you have the we're at 209.11, and you just need to close under 209.35. When we started the program, we were at 209.75. So you can see that continues to go south. The SPY has 61 million. It's going into 159 million. And the big number that actually is going into is that March 18th number. The March 18th number is the benchmark all over the place, folks. It's the benchmark inside the indices. It's the benchmark inside the gold contract. It's the benchmark inside the dollar index. The Qs, the NDX 100, same setup there. We're at 16 million. It's going into 41 million. Not even close juice-wise. And that, it looks like it's going to definitely close under this 108.20. Yeah, it is. So, we'll see what type of... Now, when you get a market like this, okay, so you go to a high, have lighter volume, reject higher price, you've been in a consolidation, what does it set up? It sets up that, specifically, at the beginning of the week, you're coming into numbers. Now we're going to run down to the other side. As we run down to the other side, the real question is going to be, and is, will the volume contract or expand? You get volume that contracts, guess what? It'll just jump right topside again. You start getting the volume to expand, and what you're going to see is that you'll get down to the consolidation that was in December and January. Yeah, December and January. Those marks there, that's where it wants, that's the bottom of the consolidation. And what's still out there, big time, is that October 15th, high volume swing low. And man, it's a long way away. We're at 209. That's 187 to 181. It'll be pretty clear though, because this consolidation has been a long time consolidation. We're consolidating. You can, if you're a bull, you can make the argument that, hey, we're consolidating at highs. That can be made. If you're a bear, my take is that, yeah, you have these high volume lows on a continual basis, and that's where this baby wants to go. Because each time it gets up to the 208, 209 area, volume dies in the vine. Each time it's coming down to the 197, everyone's trying to get out of the market at the same time. But they're doing a very great job. The distribution out here has been phenomenal. And the operators are doing a really great job of making sure that they're getting out. And when you have distribution also going on this long, folks, at highs with light volume, oh man, it's just a matter of what time that it goes down and the viciousness of the downdraft, the buying, the dip buying, doesn't save the market, number one, and then what ends up happening, you get a couple days of that, and what that sets up, then that sets up folks that have been over their head, that whole thing about when the tide goes out, who doesn't have the bathing suit on? Well, bottom line is that that's kind of where we are at this particular point. When you take a look at the technical aspect as to where we are, the bottom line is that none of the indices, well, the small cap is, that the SPY, the Qs, they all, once they had broken down their, in that October 15th level, they haven't got back inside the range. They haven't got back inside their channel. This channel that we're talking about, bottom line, it had broken the channel on the 10th of October that got above it, broke it down again on the February 6th. We haven't been back inside that larger channel since then, meaning the up channel. You're right against it, and each and every time, well, today it didn't even make it to the top of the channel. The top of the channel today would have been up at that 213.87 level. We made it to 210.63. So what does that set up? That sets up, guess what? We're going to make a run for the lower end of that channel. And what you want to do, watch the dollar, because the dollar is basically telegraphing lower price. This market has absolutely loved a higher dollar. It's pretty wild how that works, too, no doubt. But the bottom line is that love the higher dollar. Now, we haven't talked about Asia. Next hour, we'll talk a little bit about that, because Asia, folks, is on a tear. I mean a tear. The Hang Seng is at 28,000, and that was at 23,000 in March 12th. Okay, and do not short this thing, that's for sure. This is going to be an extended ABC structure on the way up. It has volume. It had volume when it went up on the 9th. It had 5 billion shares. Last night it had 4.8 billion shares. So this is going to be one of these parabolic moves that, basically that the Hang Seng likes to do. It hasn't done one of these for a long time, but the Hang Seng itself likes to move. When it moves like this, it is like insane. And if the last time it actually moved like this, look at this. When you look at 2007, it's pretty amazing. At one point, we went from 19,300. That was in August. You went from 19,300 to 31,900 in 3 months. And then it took 3 months to come all the way back down, and it took over a year to get down to 10,000. So you started at 19,000. You go to 31,000. If you ever held it for a year, you're already being in a losing position. You went back to 16,000. So pretty intense. Bottom line is that we'll see what kind of expansion ABC structure on the way up that this is going to lay out. The Apple, we go take a look at Apple. Apple came across saying I think they sold like about 1 million watches over the weekend. Apple can't get any traction. Apple's at 126.80. That 126.80 level is going into the downdraft with 74 million, and we've done 34. Folks, this Wednesday night, 5 to 6:30, I'm going to be doing outstanding options webinar. It's an hour and a half. It's only $97. You want to understand options, the volatility, the premium aspect of it. Check it out on the front page of TFNN. And as you're over there, check out our man, Mr. Dave White, under Breaking News. He's got a great spoof of Janet Yellen with interest rates. It's fabulous, folks. It's a happy spoof. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow Industrials are down 73. Nasdaq's off 6.5. S&Ps are off 9. Gold's down $5. Silver's off 11 cents. Bonds, the 10 years up 7 ticks. 30 years up 2 ticks. And King Dollar up 114 ticks at 99.71. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We had the Dow down 80, NASDAQ off 7.5, S&P's down 950, gold contract down $5.20, traded at $1,199 an ounce. Silver down 11 cents at $16.27 an ounce. Platinum off 20 bucks at $1,152 an ounce. Copper down a penny and a half at $2.72 a pound. Light sweet crude up 32 cents at $51.97 a barrel. Bonds, we had the 10-year up 7.6, 129.01. That rejected lower price, had lighter volume, starts moving topside again. That wants to go to its January highs. 30-year rejected lower price, had lighter volume. That's trading 163.17. Also wants to go to higher price. Pretty amazing. The bond market, folks, rates, Fed might want to go up, but guess what? The market's saying they're going to go down. The 10-year right now is trading at 1.932. So if you're looking for a mortgage, go get it. Because will they get cheaper? Yeah, they very well can get cheaper. Rates, if they go after the high, but bottom line is that the rates are at a decent level right now. 30 years probably running about 3.85. King dollar up 159 ticks, trading out at 99.75. What King dollar did out here, folks, today is this. King dollar rejected higher price, had lighter volume, right into the benchmark of March 18th. Our phone number is 877-927-6648. Let's call, folks. I want to know what's going on in your world. Now, I'm going to change it up a little because I'm going to go to the world of the King dollar first out here today. Why? Because, see, King dollar, folks, the benchmark on King dollar is the benchmark on all the indices also. And that benchmark is March 18th. The high of King dollar, March 18th. This is where King, that was the first time that King dollar came down with juice. Highly volatile day. That's where the benchmarks are, and not only just King dollar, that's where they are in the indices. That's where they are in the metals market. It's all there. So what we had out here today is it was first King dollar who rejected higher price. King dollar traded up nice this morning, couldn't handle the higher price, had lighter volume. King dollar went to 100.27, which got over the 100.12, closed underneath it. We did 57,000 contracts versus 103,000. So you did half the amount of volume, couldn't handle the price. What that sets up is that, okay, now King dollar is going to go down and try to get into the lower end of the consolidation. You have the high volume spike at the 94.76. That was the ballistic move it made when the Fed came out with their statement removing patience. You know, we'll see how it comes off the high. Now, the information that King dollar is going to give out off this high is pretty cool. Because what it is this. If King dollar just comes down off the high and doesn't have volume, all that's saying is that, yeah, it can come right back up to this 100 area and build cause to try to take out the highs. If King dollar comes off this high and has volume, the probability is much higher that King dollar not only will get down to the swing point of 98, but then that will get into the 94 area, and we'll see whether we'll break it. The reason being is this. When King dollar came off its highs, it came off the highs with big volume. You come off the second high with big volume, that's a big heads up. That heads up would be, you have two different things. You'd have the extension on the way up with King dollar. It did an extension that's way too far, meaning a 1 to 2 ABC structure up. You came off the high with volume. You go back up with lighter volume. You come back up the high with volume again. You put that case together. That's saying turnaround in King dollar. Long-term turnaround, too, by the way. So, well, let's go over to the S&Ps. Let's take a look at the S&Ps. So if we look at the S&Ps, we're going to use the, let's see, I'll use the cash. I'll use the future first. Let's use the future. S really doesn't matter what one you use, but I'll start with the future. So the S&P futures out here today, what do? Futures get up into a price point of 2101.05. Can't handle the price. Has lighter volume. Closes at 2085, which is right at the lows of Friday. That's setting up that can't bust them up. We're going to try to bust them down. And the last time that we came down here, you know, there's some juice down at the bottom, but we actually came into those lows with slightly lighter volume than the last time we were down there. But what we do have is this, is that we're at 8.5. The next level, 8.1's an important level. The reason 8.1's an important level, that brings you under the lows that were generated on December 29th, and then your next level there is about 6.0. I suspect it's going to crawl its way down there. You know, we'll see if we get an expansion of volume. You get an expansion of volume, it's going to open up that October 15th swing low. Now, what we do have out here today is harmony. Harmony in the aspect that the Qs also rejected higher price, had 17 million shares versus 47 million. So these are pretty intense rejections too, by the way. That's the number. What does that set up? That sets up the Qs now want to go down to 104.92. We'll see whether we get the volume down at those levels. The IWM. What do we have with the IWM? IWM also. Now, what's cool about the IWM is this. So check this out. The IWM got into, I think it got over the high, actually. 1 second, hold it. It was the Qs that got into the high. 120.632. Yeah, it did. Okay, so this is the IWM is a classic, man. This is a classic because the IWM did tag the high. We tagged that high with 22 million shares. Oh, but look at this. Oh my God, this is hilarious. The high, the actual high at 32 had 17 million. The following day we did 30 million. We closed at 125.70. And so that also failed the 18th. I mean the 25th. That failed at the 25th also. So bottom line, that also is going to make a run down into the 26th. That one there is a tougher setup, meaning that, yeah, it got into that high, pulled back off that high, but if you're going to sell something, the sell would either be in the NDX or the SPY. We get into the gold market. We take a look at gold. So what do we have with gold? Gold, there she is. Gold market, folks. Well, here, I'm going to use the GLD in gold because you can, sure many is if you don't have futures, this GLD, you're going to have the GLD. Now, the GLD trades at 10% of the price of gold. We traded down 82 cents. You're at 115.14. We did volume out here today of 2.9 million. Now, the 2.9 million is coming into 7.3 million from the first. That's a nice setup. This is building cause in order to basically get up into this 125 area. We've had 2 or 3 nice signs of strength. We've had 2 good signs of strength. Bottom line, we'll see where this traction comes from. I suspect the traction will come from the dollar going south. That's the way that this seems to be set up right now. If we go take a look at the SLV, the SLV is the iShares Silver ETF. Now, the difference of the SLV and the futures contract is this. The SLV looks pretty good. You know, the SLV came off a low of 1475, runs up to 1657. You back down today with 3.8 million. That 3.8 million is going into 14.7. So, right now, gold is stronger than silver. But the way that we are backing down here, you know, silver's more volatile in a huge way. If gold is up 2%, silver's normally up 4.5%. Okay, so it is highly volatile. I'd love to see silver take off like ASAP, because the bottom line is that if silver takes off, gold's going to be right behind it. If we take a look at the XAU and the HUI, which you have both in the XAU and the HUI, they are also building cause for higher price. Both of them are building cause to get over the March 6th downdraft. That March 6th downdraft was vicious inside those miners, but that's what they're building cars for. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back. Dow right now is closed down 80, NASDAQ off 7, S&P's off 8.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. We had Boeing was down $1.11. You had Walmart off 36 cents. Honeywell was down $1.42. Big Mac was off 36. We go take a look at the transportation index. So the transports folks are trading at 87.06. And if you take a look at this, it's going to be intriguing, particularly because you have the gas prices going down dramatically. We've been in a consolidation. The consolidation this index has been quite some time. So let me squeeze that in a little. So what you have is this. We're trading at the same price we were trading in October of 2014. We put this on a weekly basis, and what you're going to see, which is sticking out like a sore thumb, is what? is that good old October 14th and 15th swing low. Now, the transports, this is you want to wrap your head around this a little. So the transports are at 87.06. Well, the transports themselves, when we went south in October, it started at the price point of 85.46. So you want to watch that number pretty closely, and that's pretty close to it. Well, it's $1.50 from where we are. Because once you get into that number, that's going to bring the probability much higher, much quicker that you're going to get to the bottom of that number. Now, also what you have is that number one, brings it back to that price point, but what it also does is that it brings the probability much higher that transport index can get down to 6,500. That's insane. I mean, there's no doubt. If we go take a look at some of the equities inside that indice, we go take a look and we'll go look at UPS first, okay? UPS is a monster, of course, no doubt. UPS is trading out at a price point of 96.15. Also has been in that consolidation. They all kind of mimic each other. Now, the difference is that UPS has already gapped away. You know, UPS came out with their numbers. UPS gapped away in January from a price point of 121 down to 102. Now you're trading 96. So the way this baby is set up, we put this back on a weekly, what you're going to see is that you're back at the levels from October of 2013. And UPS really isn't in that bad of shape. I mean, UPS looks like it can go to $85. That being said, what you have is that once you crack kind of another $0.50 down, it can be some big problems, you know. So this one here is going to be important to watch, because if we get back inside, yeah, you get back inside that $90 level, it's a big problem. The reason it would be a big problem is this, is that would say that you have a false break topside. Once you get a false break topside, well, it's going to put game on the table. It looks like it could put game on the table to about $60. That'd be 33% down. FedEx, we go take a look at FedEx, FDX. Okay, FedEx is leading. FedEx is running at 173. What we have inside FedEx is this, FDX, 173. So 173.13. This here also has been in a large consolidation. And what we do have is that you have 2 weeks where you basically, where you were hitting lows with volume. The first week that was generated out there was the week of December 15th. That's when we went to 163. 2 weeks ago, yeah, right there. The 23rd of March, you went to 163 again. And both of those have volume behind that move. We're going to take a look at a few of the rails. We take a look at Norfolk Southern first. Norfolk Southern is trading at 104.87. And what we have inside that is that she's already had the first downdraft out there. That first downdraft took her from 116 down to this 101 area. And there's monster volume in the rails, folks, at every single one of these lows. I mean, it looks to me like the rails are going to get smoked. And I suspect what that has to do with, the lower price of oil. It has to do with the rails get it 2 ways. The rails were bringing sand in for fracking out to, you know, the Dakotas. They were bringing oil out. Both ways, okay? They don't need any fracking sand because of the aspect of how many wells they've been basically turning down. So those rails are in tough shape. Now, let's go over to so that's the transports. Transports want to go lower. Now, let's go over to the commercial real estate, IYR. The IYR, folks, you know, trading out, this is the iShares. of many of the large commercial real estate businesses. IYR is trading out at 77.88 right now, off the high of 100. No, off the high of 83 rather, 83. It's hanging. You get a high volume swing low that's down there. Now, these companies have been making a lot of deals lately. You know, you had Simons make a couple. Well, they tried to make they made a couple deals last week. They made another one this morning with Sears. They were trying to make a large one. They couldn't basically get it together. Simons, though, it looks like a very large ABC structure on the way down. So this is going to be wild watching this whole thing shake out. And I suspect what that's going to have to do with, the aspect that the amount of loans that they have already refinanced, you know, the world thought that the commercial real estate, number one, was going to have more defaults than they've had. The reason being is that their debt structure was so large. Well, what has happened is that because the interest rates have gone down so dramatically from 2007 to today, they got to refinance almost all that debt. That's great, and that's why those stocks went topside. What you have now is that, what are you going to do for me now? And what the problem is, what are you going to do for me now, is that their lead times, well, they've refinanced everything, so they're at lower structures. Their lead times, this is where the interest rate structure can kill them. Because when they're basically doing, whether it's buybacks, whether they're doing large projects, that capitalization rate, they can start out at one rate, they can finish with the separate rate, meaning the amount of interest, whether it goes up 0.5%, and this is where you come into the aspect that as your long-term rate versus your short-term rate versus the asset mixed in harmony. And what ends up happening is that most of the time, bottom line, it's going to be really hard to put those in harmony. So the IYR, what are we looking at? You're at 77.88. I suspect that 76 wants to get hit. And if we bring this, put this on a weekly, well, that's the first part. 74 is the first part. That's how that basically is shaking out right now. We go over and we take a look at the Walmart. So what's intriguing is that why Walmart wants to go lower. It's like, is it just the raising the minimum rate, rather, is that hurting it that much? We'll see. But the way Walmart's trading right now, it's off that high of $90. You're at 80. And she's just building cars. She's building cars to get right back inside the lower range, run down to this October 15th swing low, which is 72. It's a big number. You stay right there, folks. We're going to be coming right back with our man, Mr. Chad Coco from TD Ameritrade Thinkorswim. Dow finished down 80. NASDAQ off 7.5. S&P's off 11. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 80, NASDAQ off 7.5, S&P's off 9.5. And as we do each and every Monday at 30 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Think or Swim. Chad, folks, has the best options show on the planet. It's right here every Tuesday, 12 to 1 Eastern Standard Time. You can get that program right on your cell phone. On your cell phone, folks, just dial in TFNN.mobi in your browser. That gets you full audio. If you want to get Tiger TV, TFNN.com. Hit the little box on the right-hand side that says mobile devices. You do that, what you will get is you'll get not only the audio, you'll get the video, you get all the Thinkorswim charts. And, of course, if you haven't test drove the Thinkorswim platform, folks, do it right now. It's a great platform. As you come over to our website, On the right-hand side of the top, you'll see the Thinkorswim banner, TD Ameritrade. Hit that banner. You can bring it up. You can set up the account. They'll let you trade with paper money. And inside the Thinkorswim platform, folks, it doesn't matter whether you're trading options, equities, futures, or currencies, okay? It's all on one platform. What does happen is that if you're going to open the equity and option account, that's easy. They're going to give you the first right for level 1 options. You can apply for level 2. If you want to do the futures, you got to have level 2, then you'll open the futures, which is a separate account, but yet they're all on the same platform, which makes it really easy. Chad Coco, what's going on?
How's it going, Tom?
Going great, man. How you doing?
Yeah, pretty good. Can't complain.
Yeah, well, no one's going to listen, huh?
Exactly.
You know, it's really wild, right? So, listen, you know, bottom line is that, we're going to have another monthly option expiration. I get this coming Friday, right?
Sure do. Yep.
Man,
April expiration.
They just fly, man.
I know. It's already earnings season again.
It's hard to believe, man. Seriously.
I feel like it was just last week.
So we had the VIX move out a little today. Actually, you know, let's talk about the VIX a little, because I had a call early, and I get a lot of calls like this, and the calls specifically go like this. We have a lot of options traders, we have a lot of equity traders, and it's interesting because it seems like a lot of equity traders do like trading the VIX, and you know, they wanted me to analyze a little bit earlier, and I says, you know what, to me, you really can't analyze the VIX, because what tends to happen is that the VIX moves before the fact. I mean, you know, if the futures are down 20 and, you know, before the market's open, guess what? The VIX is going to go, right?
Yeah, exactly.
You know, so there's better ways that you could use the VIX. And so inside the option market, talk to me about how you can use it, because I know when I'm listening to your programming, that is the way that you really want to take advantage of using the VIX, right?
Yeah, so what I'm looking at when I'm looking at the VIX, specifically in the VIX options, is where all the open interest is sitting at.
Yes.
And then that kind of gives me a level of where I believe the VIX would tend to move towards, kind of based off of just general market understand. If they believe it's going to go up, then I'm guessing the market's probably going to come down a little bit. I can kind of trade around that way. I use it as an indicator. I don't really like trading the VIX or any of this, like VXX or VIX futures.
Right.
They're derivatives based on derivatives based on derivatives. So it's just kind of rolling into kind of a mess there.
Yeah. And so when we look at the VIX, and this is a great point that you just brought up, is that where the open interest is. Now, let's say if we're talking an equity. Let's say we'll do an easy one. Let's say we're just talking Walmart, right? You know, you're talking Walmart, and you're looking out at Walmart. Would you be looking at where the open interest is on the options on Walmart also?
Yeah, do the same thing on equities, exactly the same way.
Oh, that's cool, man. Okay. And so the open interest, because inside the option market, I mean, the theory is that the bulk of trade is that I guess when you think about it, crowd trading, the option market kind of understood that before we even got crowdfunding or crowd social networks, huh?
Yeah, exactly. So it's kind of a social networking in the options market.
Yeah, that's pretty cool, man. But you're right. That's what it comes down to. And so that aspect as to where that there would be on option expiration, right?
Right. So generally speaking, wherever the open interest is, with the majority of the open interest is, stocks and really everything kind of tends to pin towards that value.
That's pretty wild, man. It really is when you think about it. So what are we going to be looking at this week?
Tomorrow when we start talking about future options on futures.
Oh, nice.
Different animal than trading options on an equity.
Yeah.
So bigger people need to know that they're out there and kind of how to trade them.
That is cool, man. That's a perfect time to do this, man. I mean, you know, because, you know, I was reading something today that the premiums on the calls are a lot heavier than the premiums on the puts because we've been going up so dramatically. I'm talking about even on individual equities, I guess.
Mm-hmm. Yeah, that's kind of the same in the futures market as well.
Yeah. And, well, there's no doubt that if you're talking inside the futures market, then you're talking, we're still talking defined risk, but, Ben, you're talking about some real bread, aren't you?
Yeah, so you have a lot more leverage on your products there in the futures markets, and then also So when you're looking at futures prices, the options market anyways, you're not paying the full value of that. So you're getting leverage on top of your options, which are giving leverage on top of the futures.
Now, let me ask you this. This is pretty cool because I have some of these up right now. I got the E-mini up, right?
Yep.
So when we're trading equity options, you know, the equity options folks, you know, basically the trade is so tight, it's pretty amazing. Inside the futures, how close do they keep it there? Is it 25 cents, 50 cents? How is that normal?
Most of those are all purely electronic, so it's usually pretty tight, provided there's a lot of volume on it. So E-mini should be all right, but if you get into something like the more exotic futures, they can get pretty wide.
Okay, cool. So we're talking like 20, 30 cents? Yeah?
So it's going to be whatever it ticks in. So E-minis will be 25 cents. It wouldn't be any narrower than 25 cents.
Oh, good. I got it. Okay, thanks, man. That's what I was asking. Okay, because I'm looking at some. So that's dynamite, man. 25. Yeah, because what happens, folks, is that, and it'd be the same deal, right? So if you're buying, let's say we're at 2086 right now. So I'm buying one. I see. So this is, ooh, look at this. This is next week. Ooh, man. You got to hold on for the ride in these, don't you?
Yeah, sure do. Yeah, they move pretty quick.
Oh, but you know what? For defined risk, I guess, here, let's do this number right now. I got to do this number because I got to see how much you're controlling. So ESM5. So what happens is that one contract right now is controlling 104,000. And it's pretty intense, man. So if we went in the futures market as a defined risk, you're gonna, well, no, futures market's not defined risk. You're putting 5,000 up for one contract there.
Yeah, so this is the futures market, right? That's not defined risk. But when you get into the options, you do have
which is
some.
Yeah, which is cool. So if I went into the 85s here, it costs you about $10.
Yeah, isn't that great? Like, look at your cost of the trade is so much lower than what you kind of expecting the first time you look at it.
It is. No, there's no doubt, man. That's going to be cool. Okay, we're going to make sure we're listening there, man. And because there's no doubt, everything else works the same, right? You know.
Yeah, the expiration still kind of it's a little bit different, but it's still pretty close. If you're used to trading equity options, they trade very similar, but these do trade the same market hours as the futures. So if you're used to trading options, that just trade out through the regular market hours. You have an order in there, and it might get filled in the middle of the night, and kind of be aware that could happen.
Right, and you're definitely going to want to make sure that you are out of these. Well, I know the way Thinkorswim does it anyway, man. They're gonna send a couple emails over that you're in them, number one, before option expiration, and then making sure that the client understands you better be out of these things, right?
Yeah,
right.
we make sure that your risk is managed, because otherwise we have risk there.
Well, you know it's great. Let's talk about that a little, because folks, if you haven't used that, the platform's phenomenal, man. I mean. And just what we were just talking about right now, meaning that there's a lot of different heads up on that platform so that folks do understand, because there's plenty of new people that like to trade options, right? And
definitely are.
Yeah, it's important that they understand that, hey, listen, you know, these are great vehicles. They're defined risk vehicles, but you better make sure that you don't want to be in those things. Well, it's not impossible. That's a bad word to use, but they'll be out of them. That's the bottom line. Yeah. Totally.
Don't hang on to it unless you really want it.
No. Yeah, big time. And what will end up happening, folks, you better make sure that you have plenty of bread in your account if you do hang on to any of those options, no doubt.
Oh, for sure.
Well, listen, man, you have a great night, safe night. We look forward to the show tomorrow.
It was my pleasure.
Thanks, Chad.
Take care.
Okay, man. That show, folks, 12 to 1 Eastern Standard Time every Tuesday. Get it right on your cell phone, TFNN.mobi. He's going to go over options on the futures, and, you know, there's some leverage. There's no two ways about it. You know, you're 10, so it's costing you 10 points. That trade that we were just talking about there is costing you 10 points. But when you look at the aspect of just what we did today, which was almost a flat market, our spread was 15 points. It was actually a little bit more than 15 points. So you can see that can eat into that in about 2 seconds, meaning in a great way, because the bottom line is that this morning at the 2100, as it's testing that swing high, guess what? You know, you're basically in that put market. Bottom line is that that expansion would be pretty dramatic. In fact, when I come back, I'll give you the high or low. And in fact, I can give it to you right now. Check it out. This is pretty amazing. Yeah, we're going to talk about this when we come back, because the low is $9, the high was $18.25, and they closed out at $18. We'll be right back, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And, if we have these S&Ps up here, there's no doubt there's some good volatility. It's pretty wild how these can move around, though. There's no two ways about that. We are right now at the, let's see. So you are at the 2088 level. And these babies out here, even the 2080s moved from 365 to 850 today. So you can see they move around. So don't forget Chad's show, folks, tomorrow at noontime, right here at TFNN. Now, when we had started the program, we were talking about, I actually started out with the transports, and I actually didn't realize that a few of them were coming out with numbers. So Norfolk Southern, which we did do, that just come out with numbers, and the bottom line, this thing is getting smoked. Norfolk Southern closed at 104.87. That's going after 101. The 101 area is the high volume swing low. You get 101.52. It's going to break it. Let me pull this back. This is going to be interesting tomorrow morning. These transports are going to get smoked. So what we have is this: 100.15, huge volume. This is such a classic with distribution at highs with no volume, hammering it all the way down. They get it all the way back up again, and tomorrow just might be the day it's going to blow away. Say you go under. We're already trading at this level here. Well, here fundamentally, I'll tell you what they are saying is going on. So Norfolk Southern, second largest railroad in eastern U.S., reported first quarter profit declined to about $1 a share. They were looking for $1.26, so this is a monster miss, folks. The preliminary earnings represent a drop of about 15% from a year earlier. They said in a statement, an analyst had expected $1.26. Coal shipments from most U.S. railroads fell during the first quarter as natural gas prices spurred power plants to switch to the fuel from coal. Norfolk Southern also had been hit by falling oil prices because of the fuel surcharge it levies on customers that is tied to the price of West Intermediate crude, which has fallen more than diesel. The company will release full results on April 29th. This is pretty wild. So they released early. Interesting. Full results April 29th. So here, now let's go look at a few of the others, because what this is going to do, NSC. So this gets interesting. It didn't say it was material, but what does happen, folks, if what happens with companies, if something that's going to be material affect their earnings, they have a responsibility to let their shareholders know. So that's what this might have been out here. Let's go into Union Pacific, UNP. I suspect most of these are going to be down after the market also. UNP closed down 295 at 108. That's trading at 106 right now. That's going to be an ABC structure down. Oh, and guess what? This is crazy. Guess where it's going, folks? This is actually going right after the October 15th swing low. So the October 15th swing low, these things are game. That's where we're going. There's just way too many of them that are going right down there. October 15th swing low, 96 bucks. Stock went all the way up to 100. People are going to get hurt. Went all the way up to $124. This closed at 108.47. Right now it's trading at 106. And when did this come out with numbers? They come out with numbers on the 23rd. So let's go to CSX. This transportation index is going to get smoked tomorrow. We're at 3308 there. That's trading at 3247. That also has been going down steadily, and you got the same October 15th swing low. So we have a high out there of 37. You're at 33. The October 15th swing low is 29. That's where that baby wants to get down to. KSU. Let's go take a look at KSU. That's Kansas City. Kansas City, well, this already got hurt pretty bad. We're at 105. This is off a high of 125. This is, see, now watch this one. This is, has it taken it out yet? October 15th? Yeah, this is already taken out its October 15th swing low. So this one here is saying that, hey, guess what, man? We're going to blow you away. and it had the high volume swing low. That was at 111. Took it out as 105. Took it out with volume. We took it out the week of March 27th. This is now making its way down to 85.56. We put this on a monthly. Yeah, it's so clean on a monthly. So check this out. On a monthly, you had Kansas City make a high with 10 million shares and come off the high with 39 million and 39 million. You did a test of the 10 million with 13 million, couldn't get to its high, come off the high again with 27 million. These are big problems, folks. Now, what is really going to be interesting is this, is that CNR, is this also saying that the oil market itself, okay, is going to be basically at lower prices for quite a while. So there was a discussion this morning on CNBC, and what the discussion had to do with was this, this was a neat discussion. And what it was, folks, is that our American markets, the way that the fracking is done and the actual finding of oil, they can be turned on and turned off pretty quickly. So the argument, there was a woman on there that said that no, she felt, you know, that oil's going to be basically at $70 next year. And Becky Quick had brought up that, well, geez, you know, if they can turn it off, and this woman had brought up the idea that you can turn it off and on that quick. If you can turn it on that quick, why wouldn't they be turning it on as soon as it becomes profitable for that absolute company? And that's a great question, and it looks, you know, inside that aspect, that would say to me, just picture that we all own oil wells. We own an oil well at $51. Let's say that we got in late, you can't make money. At $60, we're making $3 or $4 net, right? What would end up happening? Well, every single time we get up to $60, what would you try to do? Bottom line, you'd be pushing oil out. What would actually be doing, it'd be a little more sophisticated than that. What we'd be doing is that as fast as we could, when you see the futures market get up there, you'd be selling into the futures market, locking in the price, delivering the oil. You know, of course, putting the rest of your expenses inside there and making sure you're getting a profit. But when you do look at it at that aspect, it's like, okay, hold it. That's going to be a huge supply line. Huge. And that is not even bringing into the equation the aspect that what these companies are doing right now is this, is that they continue to drill, but they're not opening the wells. What they're doing, they're getting them ready to open. Now, that spells even more trouble. This is Tom O'Brien. This is TFNN. Don't forget, folks, you want a great option course? I'm going to do one right here Wednesday, 5 to 6:30 at night. Check it out on the front page of TFNN. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow.